So you're looking for global growth, right? Well, what if your map is missing a key destination? I'm talking about the Pakistan Stock Exchange. Today, we're doing a high-level strategic briefing for any investor who wants to look past the headlines and find some real sector-driven opportunities. And that's really the big question, isn't it? Any emerging market is going to be complex, there's going to be a lot of noise. But inside all that complexity, there are usually some clear, powerful trends. The secret isn't trying to track every little thing, it's knowing where to look. So let's dive in. Here's our game plan for today. First up, we'll talk about why thinking in sectors is basically your best map for this market. Then we're going to get into the really exciting stuff, the explosive growth in tech, the two-sided opportunity in energy, and how banking acts as a stable foundation for everything else. We'll also touch on a great defensive play in healthcare, and then wrap it all up with a simple rulebook to help you build your strategy. Okay, first things first, let's get our strategy straight. Instead of trying to pick one winning stock out of thousands, which can feel impossible, we're going to look at the market through a whole different lens. When you think in sectors, you're not just betting on one company. You're betting on big, broad economic trends. And here's the most important thing to get your head around. The economy is not just one giant thing. When things like interest rates, government policies, or even global demand change, some industries are going to take off like a rocket, while others might, struggle. Your job as a smart investor is to be in the ones that are ready to fly. Let me give you a super simple example. Imagine the government announces a massive plan to build new highways and dams. You don't have to guess who wins. The demand for cement is a direct, almost predictable result. It's that simple cause and effect relationship that makes looking at sectors so incredibly powerful. All right, let's put this idea to work with our first major sector, Pakistan's information technology industry. And listen, this isn't just some local story. We're talking about a global tech engine that is on an absolutely explosive growth path. $2.6 billion. Let that number sink in for a second. That's what Pakistan's IT exports are bringing in annually. This is not some small up-and-coming niche. This is a mature, world-class industry, and it's become a powerhouse for the country's economy. So what's fueling this fire? Well, you've got this perfect storm of a young, super tech-savvy population and lower operating costs meeting this massive global hunger for software outsourcing. But here's the real kicker, especially for a foreign investor, these companies earn their revenue in US dollars. That gives you a natural shield against any local currency swings, making it an incredibly smart and attractive place to be. Okay, from the digital world, let's switch gears to the physical one. The energy sector literally powers everything else. And for an investor, it's this fascinating two-sided coin. You've got the stability of today versus the massive growth potential of tomorrow. This means you really have a strategic choice to make. On one side, you have your traditional oil and gas companies. They're really attractive when global prices are high, and they're known for paying out steady, reliable dividends. But on the other side, you've got the future, renewables. The government is pushing hard into solar and wind, and that's where the huge long-term growth story is really taking shape. All right, our fourth section is called Banking on National Growth, but we're really talking about the absolute bedrock of the economy, the sectors that physically and financially build the nation. So this means we're looking at both banking and construction. You know, for any investor dipping their toes into a new market, the first questions are always about risk and transparency, right? Well, the banking sector here answers that question right away. It's widely seen as a well-regulated and transparent entry point for foreign investors, which is a huge confidence booster. And the fundamentals here, they are just rock solid. We're talking about highly profitable banks that are a direct beneficiary of a growing economy. They have a fantastic track record of paying out stable dividends, and with the boom in digital banking, they're also innovating for the future. I mean, for an investor focused on income, it's a very, very compelling story. So where does a lot of the money from these banks end up going? Well, a huge chunk of it goes into actually building the country itself. And that's why the construction sector, particularly cement, is the other side of this national growth coin. It's another direct bet on the country's economic expansion. Now, the key to making money in cement is all about understanding its cycle. And it's laid out perfectly here. It starts when the economy starts to grow. Then, big infrastructure and housing projects get the green light. Suddenly, demand for cement just surges. And for investors who time that right, the returns can be absolutely massive. But what happens when the economy isn't booming? I mean, what if you're looking for stability, for something that performs even in a slowdown? Well, that brings us to our defensive play, pharmaceuticals and healthcare. This chart shows you exactly what defensive looks like in the real world. During an economic slowdown, demand for something cyclical like cement might totally fall off a cliff. But people always need medicine. So the pharma sector tends to hold its value, providing that crucial stability to your portfolio right when you need it most. But hey, don't mistake stability for boring. There is a really powerful growth story here, too. You've got a growing population, people are more aware of their health, and there's a huge demand for affordable medicine. Plus, these companies are expanding into export markets. It's that perfect, rare mix of defense and offense, all in one sector. Okay, we've looked at the map, we've explored the key territories. Now, let's get practical. This final section is all about turning this information into a real, actionable strategy with a simple investor's rulebook. This is it. This is where we turn all that information into action. How can you apply these sector insights to actually make smarter investment decisions? It really just comes down to following a few simple but powerful rules. Here's your rulebook. Rule 1. Diversify across different sectors. Because as we've seen, tech and cement just don't move in the same way. Rule 2. Keep a close eye on government policy changes. A new infrastructure plan or a tax credit for renewables can change everything overnight. 3. Follow key economic indicators like inflation. They'll give you clues about whether it's time for growth stocks or defensive ones. And finally, and this is crucial for foreign investors, always monitor the currency exchange rates. It's a direct part of your final return. So the final question is really for you. Now that you have the map, what's your story going to be? Are you going to chase that explosive growth in tech? Or maybe you want the steady income from banking? Or perhaps the built-in stability of pharma? It's your story to write.